If you're watching this video, you probably have an important investment banking interview coming up and want to make sure you're fully prepared. Well, you've come to the right place. Investment banking is a highly competitive field, and standing out in an interview is crucial. Today, we'll explore common yet challenging behavioral and technical questions you may encounter. So, let's dive in and get you one step closer to landing that dream job. But first, please do me a favor. Hit that like button, share this video, and subscribe to our channel for more insightful career content. Stay until the end to access valuable resources. All right, let's start with behavioral questions. Investment banking interviews often begin just like any other interview, with an opportunity to get to know one another. Typically, the interviewer will provide an overview of the company and the position, and then ask you some questions about yourself. These questions are designed to break the ice and give the interviewer a sense of who you are and whether you're a good fit for the role. Here's the first question. Can you walk me through your resume? This question is almost guaranteed to come up in your interview, triggering a story reflex. That is, an automatic response to share a story. This is your opportunity to guide the interviewer through your professional journey. Start with your educational background, move on to your work experience, and highlight key achievements and skills relevant to investment banking. And make sure to connect the dots between your experiences and how they have prepared you for a career in investment banking. Next question. What exactly do investment bankers do? Don't laugh. I understand it seems straightforward, but many interview for roles at places like Goldman Sachs without knowing what the job involves. If you're changing careers or come from a non-financial background, expect to answer questions about your industry's fundamentals. For example, investment bankers help companies raise capital by issuing stocks or bonds. They also advise on mergers and acquisitions, providing strategic guidance to maximize value. So, here's a free resource. We can help you enhance your fundamentals with our free investment banking course notes. Check out the description below to download them now. Next up, why did you choose to apply to our firm? This question falls under what I term fit questions, evaluating your understanding of the company and your motivation to join. Before your interview, study the firm's history, culture, recent deals, and industry reputation to demonstrate your thorough preparation and genuine interest. For instance, if the firm is known for its strong mentorship and professional development, mention how this fits your desire for growth and learning. You can also point out any unique attributes or initiatives that stand out to you. All right, now picture this. You're in front of a whiteboard presenting a chapter from your favorite finance textbook. You have 5 minutes. When faced with this request, avoid selecting the introduction. The goal here is twofold. First, the interviewers want to assess your ability to explain complex financial concepts clearly. Secondly, they aim to assess your impromptu presentation skills. To excel at this, practicing is crucial. Rehearse with a friend to build confidence and ensure a smooth, engaging delivery. All right, keep watching for more free tips towards the end of the video. Having discussed behavioral questions, we'll now explore technical ones, which assess your grasp of financial concepts, valuation techniques, and industry knowledge. Let's explore some of the most typical ones you'll encounter. How would you value a company? Valuing a company is one of the most popular technical tasks you'll be asked to perform in finance interviews. Here, you must discuss several valuation methods, such as discounted cash flow, DCF analysis, comparable company analysis, and precedent transactions. DCF analysis projects a firm's future cash flows and discounts them to present value using the company's weighted average cost of capital, WACC. Comparable company analysis involves finding publicly traded companies similar to the one you're trying to value. You then compare financial markets such as EBITDA, stock price, and price-to-earnings (PE) ratios. The precedent transaction analysis is similar to comparable company analysis, but instead of comparing ratios, you look at the prices paid for similar companies in past transactions. When describing the valuation methods, make sure you also highlight each one's strengths and weaknesses. Next, what's the difference between enterprise value and equity value? There are no traps here. Just recognize the difference between them. Enterprise value is a company's total value, including its equity, debt, and cash. It's calculated as market capitalization plus debt minus cash. Equity value, or market capitalization, is the value of a company's outstanding shares. It's calculated by multiplying the stock price by the total number of shares. In short, enterprise value reflects the total company value, while equity value represents the value available to shareholders. By the way, are you curious about the job outlook and trends? Discover the top investment banking skills employers seek in our detailed job report, analyzing over 1,000 recent job postings from renowned companies. Access it for free via the link below. All right, now here's another question to consider. Let's say you know a company's net income. How would you figure out its free cash flow? This isn't tricky, but you must be prepared because it's expected. To calculate free cash flow, start with the company's net income. Add back depreciation and amortization because these are non-cash expenses. Subtract capital expenditures, CapEx, representing the company's investments in plant and equipment. Then account for any increase or decrease in net working capital, resulting in the company's free cash flow. Next in line. How do you calculate the terminal value of a company? Terminal value, TV, is a company's estimated value at the end of a specific period. It's a crucial part of discounted cash flow DCF analysis. Two primary methods calculate terminal value: the perpetuity growth model and the exit multiple approach. The perpetuity growth model assumes that cash flows will grow at a stable rate indefinitely. The value is then discounted back to the present day. The exit multiple approach estimates terminal value based on a multiple of a financial metric, such as EBITDA. This approach is commonly used for companies expected to be acquired or liquidated. Another question you may encounter is a P/E ratio of 10 high? Now, that's a tricky one. It's not a yes or no question, but it depends on various factors. P/E ratios are relative measurements, so to determine if a P/E ratio is high or low, you need to compare it to the P/E ratios of similar companies in the same industry. Generally, higher growth firms tend to have higher P/E ratios because their current earnings are low relative to their stock price, with the expectation that their future earnings will grow significantly. And now, the last question. Why should a company consider issuing debt instead of equity? There are no hidden traps here. With this question, the interviewer wants to assess your understanding of corporate finance principles, capital structure decisions, and your ability to weigh the pros and cons of different financing options. To respond effectively, highlight the benefits of debt financing, which include potential tax advantages, fixed interest payments, and the ability to maintain ownership control and decision-making authority within the company. And there you have it. These are typical questions you'll get in your investment banking interview. But before we sign off, here's another valuable resource: a curated list of the top 24 investment banking firms based on extensive research involving over 3,000 industry employees. Be sure to like this video, subscribe to the channel, and activate notifications. We'll continue to share career videos to help you on your journey to landing your dream job. And if you wish to get job ready for a successful career in finance, don't miss the opportunity to subscribe to the 365 Financial Analyst platform. Stay tuned for more insights into business and finance.